In the UK, a good credit score is your financial passport. It unlocks better deals on loans, mortgages, and even mobile phone contracts. Lenders use your credit history to assess your reliability. A history of late payments raises red flags. It suggests you might be a risky borrower. This can make it harder to get credit in the future. Your credit score is a number. It reflects your credit worthiness. A higher score means you're considered low risk. Late payments can significantly lower this score. Even one missed payment can leave a mark. This mark can linger for 6 years. It's crucial to understand the impact of late payments. They can affect your financial well-being for years to come. It's not just about getting approved for credit. A poor credit score can also mean higher interest rates on loans, difficulty renting a property, and higher deposits for utilities. Protecting your credit score means prioritizing on-time payments. It's one of the most effective ways to maintain a healthy financial profile. The consequences of late payments go beyond just a ding on your credit report. They can trigger a chain reaction, leading to further financial strain. Here's a closer look at the potential fallout. 1. Late payment fees. Missing a payment often results in a fee. These fees vary depending on the lender. They can quickly add up, especially if you miss multiple payments. 2. Increased interest rates. Many credit cards offer introductory 0% APR periods. Missing a payment can cause you to lose this benefit, resulting in a much higher interest rate on your balance. 3. Default notices. If you continue to miss payments, your account could go into default. This is a serious mark on your credit report and can make it extremely difficult to access credit in the future. And 4. Debt collection. In some cases, lenders may pass your debt to a collection agency if you don't contact the lender. This can lead to further letters and telephone calls. Discovering a late payment on your credit report can be stressful, but it's not the end of the world. Here's what you can do to minimize the damage. First, act fast. The sooner you address the late payment, the better. Contact your lender immediately and explain the situation. They may be willing to waive late fees or work out a payment plan. Second, check your credit report. Request a free copy of your credit report from Experian, Equifax, or TransUnion. Review it carefully for any inaccuracies or errors related to the late payment. Third, write a goodwill letter. If the late payment was due to an extenuating circumstance, consider writing a goodwill letter to the lender. Explain the situation and request that they remove the late payment mark from your credit report. And fourth, set up payment reminders. To prevent future late payments, set up reminders for all your bills. You can use a calendar, a budgeting app, or even simple sticky notes. Preventing late payments is the best way to protect your credit score. Here are some proactive steps you can take. 1. Embrace direct debits. Automate your bill payments by setting up direct debits. This ensures that your payments are made on time, every time. 2. Explore budgeting apps. There are numerous budgeting apps available that can help you track your income, expenses, and upcoming bills. This can prevent you from overlooking due dates. 3. Negotiate due dates. Some lenders allow you to adjust your payment due dates to align with your payday. This can make it easier to manage your cash flow and avoid late payments. And 4. Build an emergency fund. Having a financial cushion can help you cover unexpected expenses without derailing your budget. This can prevent a situation where you're forced to miss a payment due to a financial setback.